It's late. Hello, Internet. Welcome to Making Money. My name's Eric, and this is your Daily Dollar, our financial segment where I give you one financial lesson every day to help you reach your money-related goals. We're talking about investments. And the other day we did a video on 12 types of investments that you can start getting into right now to build out your portfolio and make more money as an investor. Now we're breaking down each one of those types of investments into more detail to give you an idea how they work and how you can actually make money using them. Today, we're talking about currency, which is really interesting as an investment vehicle. Currency is one of those things that, in my opinion, breaks some of the investing rules, and we'll get into that today. In the video that we did the other day and a video that we did a while back on what makes money money, we said that in order for something to be considered a currency, it has to have a measure of value, a medium of exchange, and it has to be a store of value. We actually talked about a few more things in the original video about money, but those are the three big ones. We also mentioned that when we think of currency, we tend to think of what's called fiat currency, which is currency put out by governments. But currencies have existed long before there were even governments. We used to use shells and rocks and stuff as currency. And as long as it hits all of the things that currency needs to be, technically, yeah, that's considered a currency. Currency is interesting too because, yeah, we can invest in it. When we talk about investing in foreign currencies, it's all about the changes in price of the currency over time. You can exchange one currency for another and make money off of fluctuations in each of those currencies. We had also mentioned that the most common, well, maybe not the most common, definitely more popularized these days, way of investing in foreign currencies is Forex, which is foreign exchange markets. Today, we're going to break down 5 ways that you can invest in currencies. Number 1, yeah, you can invest using a standard Forex trading account. If you find a Forex broker or a Forex exchange market, or a Forex exchange market, foreign exchange market is a Forex exchange market, you can exchange foreign currencies. And this is a great way to get into it. Just like any type of investment though, make sure you understand the risks when you're getting into any of this stuff. Research Forex if you're really interested in getting into it. You should know that yes, while foreign exchanges work kind of like stock exchanges, there is definite differences. And we're going to go over a few here. So the first type of difference between Forex and, say, U.S. stock exchange is the fact that when you buy or trade currencies, you're actually trade currencies in pairs. You have 2 currencies that you're trading. One is considered your long, and this is the one that you expect to go up over time. And then you have your short, which you're betting on will go down. And it's that gap between the prices where you're actually making your money on Forex. Another thing is that there is no regulated currency exchanges. That means there's no central clearinghouse for trades, which is interesting. There's also no uptick rule. If you're not familiar with what the uptick rule is, this is a rule in stocks when you're buying and selling shorts. Then the rule states that the short must be either at must be at the price above the last traded price for that security. If you don't understand what that means, it's perfectly fine. You probably don't do a lot of stuff with shorts. If you want to learn more about what shorts are or how to trade them or buy them, sell them, feel free to look into that. They're kind of interesting. The other differences are that there's no upper limit to your position. Which is interesting. This means that positions can be technically infinitely big. And finally, currency dealers generally make money on the bid-ask spread rather than charging commissions. That means that there tends to be fees priced in. So keep that in mind as well. There are also some other obvious glaring differences, but that's just a few to consider when you're getting into Forex trading. Now, that's just the first way that you can trade currencies. When we talk about currencies, like I said, they tend to break some of the rules of investing. I am a proponent that CDs and savings accounts are not investments. They are a means to save money. Yes, you get money off of interest rates, but I do not consider them investments myself. I consider them savings. Now, on the other hand, when we talk about the second type of way that you can invest in currencies, I will actually admit, yes, CDs and savings accounts can be used to invest in foreign currencies. So how is that? Why is it that a CD or a savings account is not an investment when we're just talking about the US dollar or whatever our base unit is, but it is when we're talking about foreign currency? Well, it's kind of interesting. So if you're not aware, a certificate of deposit is a CD, and it's basically a type of savings account where you can put money in for a longer period of time and you get a higher interest rate on it. Again, I wouldn't normally consider this an investment because it's just making money off the interest rates. However, you can create CDs and savings account in foreign currencies, world currencies. And if you do that, you will actually get local interest rates from that specific country's currency. You can also do basket CDs that allow you to get a mix of various currencies. This is interesting because these currencies are subject to their exchange rate fluctuations, and they tend to have higher interest than the normal dollar denotation CDs. Why do I consider these investments? Because that if you put money in to one of these, it turns into that foreign currency. It will then stay in that account for a certain period of time. Let's say a CD. Let's do a 9-month CD, right? It'll stay in that for 9 months. When it comes out, you will get the value of whatever the exchange rate is at the time. So if you expect that in 9 months, the foreign currency will be worth more, you can create a CD now in that foreign currency, invest in it, and in 9 months, you would get the returns from it. So in a way, yeah, this is kind of investing. Weird to think about. And in fact, the rest of these are slightly different ways to think about regular investments that allow you to get exposure to foreign currencies. So that's number 2. Number 3, foreign bond funds. Yeah, you can get bonds in foreign governments and corporations, and you get interest in that foreign currency. That's a way that you can actually get into trading or investing in a foreign currency, kind of indirectly. Another way to do that is multinational corporations. You can invest in corporations that work primarily outside of the United States or have operations in other countries. Those operations will make money in that foreign currency. And if they do, and you believe the exchange rate to be in your favor, you can make more money off of that exchange rate. So this is another kind of bypassed way to invest in currencies in other countries. Finally, ETFs. And we'll get into ETFs a little bit more later because we're really going to dive into exchange traded funds. But yeah, you can trade them just like stocks. And ETFs can be baskets of, currencies, of foreign currencies. And you don't need to trade on Forex. This allows you to invest in currencies just on normal US exchange. And that's kind of cool. So when we think about trading in currencies, we kind of have to think outside the box a little bit. And yeah, they can break some of the conventional thinking around investing, but it really involves you thinking about how you can use other asset types that touch into these other foreign currencies. This also allows you a little diversity because, yeah, you're investing in the foreign currency, but you're also investing in whatever the asset is you're looking at. So yeah, some interesting ways to think about currency. Hopefully this has opened your eyes. Hopefully this has got you thinking. I'm interested. Do you do any trading in foreign currency? Are you aware that you do any trading in foreign currency? Much like I mentioned, there's a lot of corporations that we invest in on the stock market that have, they either are based out of foreign countries or have operations in foreign countries. So you might have some foreign exposure and not even know it. Be interesting to look into that and see what you find. I hope you guys like this lesson. If you do, feel free to like this video. Always appreciate it. Always appreciate subscriptions as well. If you're enjoying this series, it helps you keep in touch and see the latest videos. You can always hit me up on Twitter, link in the description. I'm interested in hearing what you have to say on the currency front, foreign currencies. Feel free to leave that in the comments below. And I will see you guys tomorrow for another lesson. All right, guys. See ya.